Hello, everyone. Glad to be on the panel here with some illustrious gentlemen speaking about silver. Jessome, President and CEO of Silver Tiger Metals. We've been in Mexico a long time, and as most people know, that's kind of the kingdom of silver, and I'm really looking forward to having this conversation with these fine gentlemen.
And I'm Ian Harris. I'm the CEO and President of Outcrop Silver, where we have our flagship project, Santa Ana, a primary silver project in Colombia.
Gentlemen, thanks very much for joining us. It's a good time to be in the silver gig. At the moment, prices are really kind of ramping up, and equities likewise. That after the last 3 years, it kind of felt like nothing was going to move precious metals, but here we are. What are the key drivers behind that, Glenn?
Look, it's always been for us supply and demand. We've been in Mexico a long time. We built a number of mines there, as people are probably familiar with. Sold a few to majors. Getting into production is the key. But boy, getting in production at 2,400 gold and $30 silver, that's what we dream about. And there's not enough. That's why the price is there. Let's face it, 800 million silver equivalent ounces this year. We need 1.2 billion. That ain't rocket science. Everybody can figure that out. And, that's where we are. There's all kinds of reasons for that, I'm sure we'll discuss, but it's got to be supply and demand 100% as far as we're concerned.
So, if you read Twitter and you are looking at everything online, you see lots of charts and you see trailing gold and all these people piling into silver. And I think that Glenn has it perfectly correct. There's a major difference between this spike and every other one, is that there is a significant supply-demand gap, and it's driven by industrial. Solar panels went up over 60% last year to 200 million ounces. That is 20% of all world supply, or 25% of all mine supply. And primary silver projects are rare as hen's teeth. So this one's going to play out a lot different. And so I, as a mining engineer, I got a long-term vision and can't wait to watch how this all plays out, because I know it'll be significantly different than past silver booms.
Right. And if I think of silver, go for it. In fact, both feel free to jump onto each other's comments the whole way through.
On the solar, and really we saw this coming at you too, Ian, like the fundamental change driving that was technology. Look, technology is going to drive silver. But let's look at solars. PERC going away. PERC was everything. Now it's going to TopCon and HJT. TopCon, 30% more silver. HJT, 15%. So forget about how much more they're putting out as far as silver farms. It's going to be more silver and all the new technology. So it's just a self-fulfilling prophecy, more. So that's really important on the solar. I'm glad you brought that up.
But is it as simple as that, guys? When I think of silver, I think it has been quite an erratic mover. It's obviously correlated with gold, and whatever you think of those ratios need to be. Silver bucks, believers in silver are quite fanatical about this one, but governments too, it seems at the moment. So do you have any sort of views on the types of levers that are out there by the people who control silver or influence the silver price? Is there more to it?
I'll take a stab at this first, right? Yeah. And I think that people that have been in this space for a while have been saying the wheels are going to fall off. It's a matter of when the wheels fall off. So I think some of these additional things, such as chasing gold, some of these other additional catalysts, fear of inflation, all these other things are kind of the traditional reasons why silver spiked in the past. But the collision and the wheels falling off is truly, I think, the underlying current is the supply and demand, and a demand that's different demand. It's a demand that won't go away on a turn of a switch, right? If you're using silver, you're already using it because you want the best conductor of metal in the world. That's not, the corrosive properties, et cetera. You're already pricing in the price point, right? Otherwise, you'd use copper, which is 100 times less expensive. So it's already built in. So it's what's really going to drive the long-term impact of silver price is the fundamentals.
So I want to come at it from a different angle, Matt, because from my perspective, let's put the investment in one box and the industry in the other. But we're miners. We've been milling mines for 27 years in Mexico. Let's come back and look at something really simple. Next year, there's going to be 51 primary silver producers on this planet we live on. In 2027, that's going to be down to 44 because we mine ourselves out of business every day. In 2028, 38. But we keep coming back to supply and demand. Forget the 800 we're making now. You're going to have 38 mines left. Now, those are primary. Sure, there's going to be byproduct and copper mines and blah, 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 blah. But boy, when we, Ian and myself, add ourselves to 39 and 40, boy, what a nice place to be, because they are not easy to find, silver mines. Make no mistake about that. They're really, really hard. And those are the real numbers.
I like to take it just, most people, it's only 30% of silver comes from silver mines, right? So silver could go to $1,000 an ounce, and it doesn't change the idea of building a copper mine or not, right?
Right.
And so that's big for us. So I'm a mining engineer. So I keep saying this because my focus is a little different. It's about getting things into production and driving it. And that's why I like being involved where I am, because we're so high grade, so high recovery, that it's going to be a future mine. And we've seen these patterns before, and we know that getting into production is, you are the consolidator, right? You are in a leadership position when these booms take off. So it's very important that this price is, in many of the production, is price agnostic. And again, silver projects are rare as hen's teeth. So, obviously I'm wearing my happy shirt right now, right? 'Cause it is Friday, but it's obviously,
I was wondering.
it's Friday in Medellin. So you gotta fit in, right?
Cool.
But it's obviously, we're coming in, and I think we're well positioned. The smart players are very well positioned to take very good advantage of what's going on right now.
Well, I hope you enjoy tonight when it gets there. But coming back to one of the things you just said, in terms of like 30% of silver production comes from pure play, silver mines, the rest is byproduct. You have to kind of ask the question then, how does one factor in trying to estimate what the supply could be coming down the line? If I'm looking at silver mines, I get it. If it's a byproduct elsewhere, is there danger that the market gets flooded and we see a sort of regression in this recent price uptick?
Well, I think that there are levels, right? So are we talking the difference between 1% and 2%, and we start getting some finesse? But when we see the size of the supply and demand problem that we have, and we haven't even tied in that what happens when silver goes to $50 and people decide to stop selling their inventories. You're going to have like multiple factors happening at the same time. The amount of lead silver mines that decided, whoa, our IRR went up 5%, let's build, is not going to be, it's not going to be a big enough piece to fill that hole. We're not talking about we're not talking about a copper market where you have a 1% additional demand or a 1% drop in supply. Solar panels went up 60%, and it's still going to grow. And I think there's some fundamentals. Why is solar panels so hot right now? Because it's the quickest projects you can build, and you have AI and data centers that are being built left and right with no power, and the only solution they have is more solar panels. So there's some fundamentals here that are such big numbers that, like, trying to polish smaller details of the model, it doesn't make a significant impact.
Two things I want to add there. Number one, back to us being miners. The all-in sustaining costs for silver across the board last year, $16.20, up 57%. Projected by the Silver Symposium, go at 9.9% for the next 8 years. Do the math. Why? You think the silver price is going to go backwards when it's going to be 26, 27, 28 to produce it? They're going to need it. We're not even talking about the market. We've got solar, battery powered cars, guys. It's, there's double in a hybrid, double in an electric. That's already up to 100 million. 37.5%. People don't think about this, of the silver that's of that 800, that's in electronics. That's in your cell phones and your computers, and here comes AI. Cold sintering is going to be huge. That's the new technology driving all these supercomputers. You can sinter at 200 degrees with silver or 960 with lead. All the new electronics are so sophisticated, so tight, and so small, you can't use lead. So it just goes on and on and on and on demand. And that doesn't even talk about not the crazy people, I shouldn't have said that. The people now that are buying the silver up at Costco in a half hour. Like, if you don't think that market's going to improve. So too much demand. Forget about how they're going to supply it. Too much demand. I'm very happy we're going to be 39 or 40 on the list. And Ian, I'm sure you are too.
I think silver bugs are very happy to be called crazy. It's what makes them tick. But let's talk about the commodity market at the moment. We're seeing a sort of explosion in price for obviously gold, $2,400 gold. Sort of $31 silver. We're seeing copper at $5. We're seeing nickel at $20,000. Everything's kind of really moving. The metals market is a good place to be right now, but these other commodities have different drivers. Copper has different drivers. Nickel certainly does in terms of the influence of production out of in places like Indonesia, Philippines, and and elsewhere in Asia. New Caledonia, that's what we're struggling to find. Silver, though, it's very heavily vested down in South America and Mexico, obviously. Do you expect it to behave, given what you've just said about the industrial demand drivers, do you expect it to behave differently moving forward to how it has done in the past, a sort of erratic commodity, as I phrased it earlier? Ian, what do you reckon?
So overall, I think, if you look at the spikes in silver in the past, there was a flood of supply either through small mines being built in Nevada, right? You can't do that anymore. Or because the U.S. government was selling silver that was used to be tied to their old silver certificate type monetary instruments, right, which were dissolved. So this time, where's the new supply going to come from? And I see it in Glenn. I know it in myself, right? We look at projects that can actually be built where a lot of market focus is on exploration and just finding and not even caring if it can be built or not. It's why you make fun of me for carrying my little piece of silver that came from the Santa Ana mine, but I wanted to prove.
I wanted it.
Yeah, you're jealous. But I want to be able to prove that you can get and produce silver out of a project. It's a proof of concept for me. But I don't think there's going to be a lot of new production that can come online. There's a couple underlying, independent of commodity, the times to explore and permit just keep getting longer and longer and longer and longer, right? So that's a big reason why you see this spike. It's just everything is playing out, right, at the same time. But then if you look at silver, there's only primary silver seems to come a lot. It's not easy to mine. You're in normally narrower structures, and you can't, in the 1980s, you could mine it in the United States. You're not paying miners $300,000 to mine a 1 meter vein in Nevada anymore. Those days are over. So I think it is going to play out much differently than the past, because it's going to continue to be difficult to get additional supply. And the hole is so big, I feel like it's like a little bucket, and there's this, the guy who's like mopping on the beach trying to clean up as each wave comes in. So I'm just happy to be a part of the story and watch it play out, because the rules will be completely different. I
would echo that, and I keep coming back supply for all of the reasons, including investment opportunities. Look, vault supply is down 1.7 million to 1.2 in the last couple of years. They're even getting rid of what they have on the sidelines as far as being amassed. But from my perspective, look, from Mexico on down is going to be very important for this market. Looking at that, I just keep saying, if you have a project, if you're going to be a silver miner for the next decade, I think you're going to be a very, very happy person. And I think that your shareholders are going to be very happy because we've been mining silver, 4 mines, sold 3 to majors over the 27 years our group has been in Mexico. We've never seen a runway like this. We might gold at 240. We might silver at 8. Okay, this is an incredible opportunity for those that are going to make the metal, and we see it having some real legs here for the next number of years.
Okay, well you mentioned Mexico, so Glenn, I'm going to stick with you. Obviously, there's been a perception in the market that Mexico's a difficult place to mine and mine silver, not historically, but because of the current government. And there's elections coming up shortly. What do you expect to see? What are the results?
I just want to see how we manage our businesses. So we looked at 7 years ago, we started on this project, and 13 years is the average time to get a project first drill hole to being a mine. People don't understand that. That's why they're, drill hole to drill, forget it. So we go in there, we spent the last 7 years, and AMLO has been there for 6. We all know that he basically has not issued any permits. Okay. He will be, it's one term in Mexico, 6 years, so he'll be leaving on June 2nd. We did all our work. We raised over $100 million from the institutions. We drilled the project out. We did a PEA, MREs along the way, and our PFS will deliver in August, July, August of this summer is our build document. So really, when he sacks us perfectly, we did our work during that period. Now this election is going to take place, okay? We think either way, there's going to be new individuals in charge. Morena, 2 women are running, Claudia and Xochitl, we'll just call them as that. There will be a female president for the first time. Morena, continuation of AMLO's party, but a different person. We think that administration is going to be much more pro-business. I'm not saying that as a guess. We've been there 27 years. We've been through 5 or 6 elections. We understand what they're saying and what they're going to be. So that will be better. Xochitl is pro-business. Okay, so that's the other side of the coin. Xochitl has basically come out and said, as soon as I'm elected, I'm pro-mining, I'm pro-business. Permits are going to start flying. We think either way is going to be fine. I want you to tell that. And it's going to be better for Mexico come June 2nd as far as mining there. Now, the election. January, Morena had a very, very large lead. If we'd been asked then what our opinion was, we would have said it looks like they're going to win the election. Whatever's happened over the last 6 weeks, this election has come very, very close. And we're just watching it from the outside. If you look at the poll we follow, it's the same poll that just absolutely bang on called the Panama election. They called the election last time for Mexico City very closely. When you get in South America, you could have divergence in polls. One could say this guy's winning by 20, and one could say this guy's winning by 20. This is the poll we've followed for decades, and which has proven to be a very good one. Right now, it has Xochitl coming all the way from being down in the beginning, probably 18, 20 points, to on the last poll yesterday being up by 1 point. This is, in our opinion, a very, very close election. We don't know which way it's going to go. If it goes pro-business with Xochitl winning, you can understand what that would mean for Mexico. But we also know the Morena side very, very well. And Claudia's party, we're thinking it's going to be much more pro-business than maybe AMLO was for the last 5 or 6 years. And we think it's brighter days ahead either way for Mexico. Let's watch that election, June 2nd, but that's next Sunday. And
I think all eyes are on it.
Everybody should be watching it. There's some it's very close.
Good. Well, a lot of people are, a lot of investors are, that's for sure.
Absolutely.
What about Colombia?
So in Colombia, it's still 2 years before elections again, and presidential terms are only 1 term maximum term limits. But of my 25 years, 15 are working and living in South America, and I've seen multiple regimes come in, and you're overall seeing a very interesting shift in South America. You see it in Argentina, you see it in Ecuador, and new politicians are demonstrating that you can be pro-business and get elected, which is something I've never seen before, right? You might have right-leaning, but they never went on this big let's go move the economy platform. And now you do. And so they're creating a new mold. I think that's going to affect overall what's going to happen in all of South America. Traditionally, Colombia for like 40 years had right-leaning presidents. So it's a little bit of a bastion in most cases. This might be a one-off. But I think the long-term perspectives for Colombia are excellent, right? They have the first leftist president. His popularity isn't holding in. But as a strategy for us, because we see this runaway, and we see what's happening in silver. It's something we talked about last time, Matt, is so we're working on a pilot scale project now to get it permitted quickly, because it's always easier to expand production than permit a larger project. So that when maybe things change in 2 years, it's a whole lot easier to expand quickly, but to be able to demonstrate the feasibility. I mean, it's one of the advantages we have at Santa Ana because of the grade, because of the recoveries, because of the high quality con. That it's kind of independent of scale, right? So you could start pretty small proof of concept and build off of it. So that's our strategy to kind of have our cake and eat it too, I think is the best way of describing as we continue to demonstrate the overall district.
Right. And so to that point, it's been an interesting 3 years for me as an investor into the space, looking at the equities market, and obviously it's had its kind of heart ripped out, with COVID and printing of money, the geopolitics of Mexico, and I guess you've explained a little bit about what's going on in Colombia as well, but the electioneering as well, in terms of the way that is certainly perceived from outside, in terms of that kind of that narrative that runs through, anti-mining narrative that runs through for the electioneering, but then it gets straight back to business as soon as the election's over. We've seen that in Chile, we've seen that in Peru, we've seen it in Colombia previously, and certainly up in Mexico as well. But I'm interested in what you guys have learned. I know you've both been in it a long time, but no one called the last 3 years. Normal, rules did not apply. We could not predict the way the market would behave. I don't know anyone who did, and we're expecting normal behavior to elicit certain catalyst responses. It didn't. So, Glenn, what have you learned over the last 3 years, and what do you now see looking forward in terms of how your company navigates the road ahead?
Well, look, I don't want to say that we've been very successful in the last 3 years, but we've been very successful in the last 3 years. It was really tough. We had the politics against us, a market that made no sense. We had great prices, and who cared about an explorer or developer? In that period, we raised $75 million bought from VanEck, SCP, Sam, Merck, the entire group, straight up equity, so that we're here today. A lot of people stopped. I'm not criticizing any of my peers. Money was difficult. It was really, the last 6 years have been hard. So let's face it. We went through a tough 6-year period, kind of a lot against us. But we got to the point in July, I got my document to build the next silver project. Look at the price. We're very, very happy about that. So, I look back, you can't affect the market. You have to move your project forward no matter how terrible it gets. And part of that's track record, part of that's experience, and having the right people give you the money to move your project. So, I'm not crying about the last 3 years. I think that reality is going to set in. They want to re-electrify the world. They want to have, everybody wants their solar, and they want copper to be the new oil, and they want to do this, this, and this. Unfortunately, or fortunately for us, they all need the metal to do it. And unless they completely say we're going back to an oil-based economy, which I don't think that world's going to do, with all the global warming, all of that, then, oh boy, they need what we got. And they're going to have to pay for that. So I can't wait to make metal, silver, predominantly, for the next, I don't know if I'll be alive long enough. Tiger will go for 20 or 30 years. Let's just say 10 to 15 and see where we are.
Okay, so as far as you're concerned, you recognize that it has been a tough period, but you were able to raise money
Absolutely.
during that to do...
That's who will win.
Get you where you are today to take advantage of this moment.
Yeah, 100%.
Right. Okay, because most companies, I was just about to say, most companies found it really hard to raise capital during this period, and became cash starved and paralyzed. I mean, you must recognize that.
Yeah, but I think also when we come into a bull style market, and we've seen those days where there's a guy who bought his 2 brand new Lamborghinis, and you're like, his project is moose pasture. We know it because we're professionals in the industry, but a lot of investors can't filter through that. So I think just seeing the companies that have advanced, not just survived, but have are still got tangible things that are doing, speaks volumes, because it was an extremely difficult time. And I think you hit the nail on the head. It was very different. The rules were completely different in this run. And I think we have to recognize moving forward will also be different, right? So that's probably the biggest lesson learned that I've said. Keep an open mind. There's so many times that I've come across in my history where somebody goes, no, that's not the way to do it. This is the way to do it. And I go, how many mines have you built? Right? And it's because they have all these, the majority of projects don't get built. So the majority of rules aren't correct. So always keep your eyes open. don't be afraid to measure and then be able to change and adjust your strategy as you move forward as quickly as possible and adjust, because the world is extremely different. So I remember when I went to Ecuador as a mining engineer, ready to build a mine, and I left. I said I was a sociologist and politician, and I said on this one around, you got to be much more market savvy. So you have to adapt as you go on, and have your eyes wide open. And adaptability is extremely important.
So I mean, look, we were, and I hope he doesn't mind me dropping his name. I was with Joe Foster on a site visit from Van Eck, a legend in the space, investor, a couple of weeks ago, and we got talking at breakfast the next morning about how many make it. His number, we agreed, was probably 1 in 10,000. Do you understand that? Like how hard it is to get where we are today and where we've been 6 or 7 times in a row? It's unbelievable. The rest, I'm not saying it's the lottery, but oh my goodness, think about those numbers. I had another smart guy in the space, thought it was 1 in 32,000. I'm talking about the first rock samples and the prospector. So I'm coming back to it, and I'm not going to agree. Yeah, the world was mixed up, but the institutional investor decides who's going to make it. And they decide on the basis of the project and the management team and deliver. Because the only way they make money is if it's a mine. Full stop. 2020, there was probably 25 silver projects got institutional investor deals and bought deals. Go to February next year. We were 4 in a row. We raised about 20 million and bought every February, just like clockwork, like that. So it went from 25 to February down to 15 the next year. And then it was 10 that got follow on. Then it was, I think, 5. So that's what I'm saying. Like, you have to keep going. It's hard to get that money, and there's competition for it. But the project and the management team and track record, that's why you get it. So, yeah, it's been hard, but we've also thought it's been a very strategic advantage. Ian, you've kept going. You've been driving. I looked at your website. I didn't know your company very well. You keep drilling. You're putting ounces out there. A lot of people just went and hid. I'm sorry, I'm not being critical. They had no choice. If there's no money, and if we hadn't got any money, I would have done the same thing. So now the people that are ready now for this market, not trying to turn on a camp that's been closed for 2 years and drill a drill hole. The ones that are ready, oh boy, do I ever think the next 2 years are going to be incredible. So there's for your silver. Pick the winners. And we can talk about valuation when you get to production in a little bit, because people don't understand what the smaller producers are being valued at today. That's where we're both going.
Yeah. Like I kind of, Ian, to your point about, if the data changes, you can change your mind, and that whole attitude to perhaps in markets like that, strategies have to change. I mean, you decided pretty early on you need to show route to market, and you got into production. You produced that piece of silver. You wanted to show that the market, you knew what you were doing. Has that worked for you? How has the market reacted to that?
So in the beginning, when I started that story, I was very sensitive to not push it too hard, because you can confuse market. Are you a producer or are you an explorer? And I think still the Outcrop, the value, biggest value proposition is being able to get over 100 million ounces in resources. And especially when you go through the list, I would have trouble naming more than 4 projects that had over 100 million ounces in it today. In a more of a developer type situation, so there's some value in there. But I do have an example of, in the beginning, I said we have to keep a drill turning, right? But just one. My answer was just one, because you can't. That doesn't justify burning more capital than that, right? But you have to stay out there, and it's tough to get results off of one drill, right? I mean, it's not easy. Yeah, especially in the type of projects we're on. But just in a week, I said, we're mobilizing a second drill. And we haven't even put the drill results out on the first drill. But because I could recognize the difference in market. And so you have to be thinking about all these things, plan A, B, and C. And at the same time, the production story, which last time I talked to you, which wasn't that long ago, it was February or March, right? It was one of keeping it, part of the story, but more about the de-risking. But in today's market, it is. Now it's like, let's go full bore ahead and show a pathway to production. So your story has to align with market and what's happening in those factors, because there's an underlying factor. You have to stay financed, And your cost of capital is critical. So you have to be in tune, whether you're 100% in agreement or not, right? Because it is what pays the bills and keeps your cost of capital low.
It's a kind of interesting point there. I spoke to some, I was at a precious metal conference in London earlier this week. And, some of the precious metal fund managers are saying, well, it's great. We're nice to see this kind of gold reaction, the silver reaction, but it needs to be sustained because they're still a little bit nervous about, where this is going. Will the central bank buying stop for gold? Will the industrial demand continue to drive the demand on silver? You two, both of you guys, must be a little bit of you go, well, I gotta believe that we're gonna shoot for the stars here, and the demand will continue. But there's a little bit of you got to hold something back here, because if you go and raise, we can go and raise money at these levels to allow you to do what you want, or you say I'm going to sit back and wait and see how this pans out for the next 2 or 3 months. I mean, how do you look at it, Glenn?
Well, from our perspective, I don't look at it across the board for anyone else but our company. So, we've been very, very successful in raising institutional capital. We've done all of the work we've done over the last 7 years, raised, I think, about 120 all in million, 75 in the last couple of years bought from the institutions. And we call it, don't quote me, about 8 million left. I don't need to raise money right now. I've just finished a 30,000 meter drill program so that we can put our PFS out in July, August, deliver that at Beaver Creek and the Denver Gold Show. And by that time, because I am permitted for the underground already, have my amendment that I need, and then get ready to build in the fall. So at that point, I'm looking at all my debt options now. I've got a data room full of debt providers. I'll need to get a component of that money from the equity markets in the fall. But that's how I manage it. I don't say, oh, it's a hot time. Look, I'm not going to say that. It seems like every February for the last 3 or 4, the window opened and then it closed, and then it closed quicker and quicker and quicker. So when that money's there, maybe you've got 20 in the bank and someone else you 23 in a bought deal, and you can really then runway yourself for 2 years. Well, you take the money. But I think right now I'm being much more strategic in that I have cash, and really I'm looking at debt/equity for my CapEx for our build, which we expect to start this fall. So, that's how I look at it. I manage it as the market. But look, I got a smart guy. I'm not going to say his name, Ian. I think you'd say the same thing. As you go along, you're de-risking. We've de-risked it now. Whenever that money gets offered, and I'm not saying at the lowest value, you just kill your share register, but you take that money because you just don't know. And look at what happened in the last couple of years. It just stopped. Like, there's just no even institutional money.
I was going to say, when it's 1 in 32,000 or 1 in 20,000, I can guarantee you that none of those companies died because they took too much money in, right? But they did because they couldn't raise any money. Now, I'm not saying I'm the exact way. I'm a little afraid I'm going to go to CEO.ca and say, oh, Ian doesn't care about dilution. But I mean, obviously I do. I'm not going to be dumb. But it is nice that your cost of capital is critical to keep your projects moving forward. So when it's a good market, obviously it's more like, if it's good, then it's more like you're shopping for stuff on sale, right? In terms of capital. So you want to raise the money. And if you can raise the money, you could take advantage of a swell or a good day or whatever, and be able to take advantage of those opportunities quickly, build some runway in front of you. It's a good thing to do. I mean, obviously don't dilute yourself down to nothingness kind of craziness, but I would lean more to take in the capital when it becomes available and build up the runway. I mean, I think since 2013, we've all been going in development style projects. Man, if I could just get 1 year of budget raised, right? Right? I mean, if it was 2007, it was like, we need to make sure we have enough for 3 years or 5 years. I mean, those are the perspective and changes.
And I think that I just want to add to that one thing. What we had talked about earlier, even when it's tough, you can't stop. Like, you got to keep moving the project forward. And the more capital you have, the faster you can go. If I'd had half the capital, I'd be 3 years from having, or 2 years from having my PFS, which we'll build on, delivered. Luckily, that's ready. Ian's kept drilling when a lot of people stopped. So basically, he's moved the project. So that capital keeps you going. More capital makes you go faster. That's the only point I'd like to throw in there.
Yeah, and I subscribe to the take the money when it's available thesis, and maybe because I'm a banker. I'm not saying because there are fees involved. I'm just saying it has been smart. And I'll also say, I think in a high price silver environment, sometimes it covers up some sins. It cures a lot of problems, but ultimately you need management teams who know what they're doing and how to allocate that capital efficiently. So, gentlemen, I'm going to thank both of you now and for your time, and more importantly, your insight into the silver market and some of the things that perhaps people should look at when they're looking to invest in the silver space. If I may ask you each to maybe spend a couple of minutes giving us reasons why we should be investing in your companies. And Glenn, I'll start with you, and then maybe Ian, you could do the same.
Look, there's for both of us, I'll start from 40,000 feet. The difference in valuation between an explorer developer now and a producer. Now, I'm not talking about big producers. Let's use an example. I mean, I know these are peers of mine. I know them well. They won't mind me talking about them. Let's talk about Aya and let's talk about Silvercrest. I mean, there are companies trading at almost a $2 billion market cap. Those are not big producers. I think Aya is a couple of million silver equivalent ounces. When they do their expansion, they're going to basically go to 6 or 7. Don't quote me on that, but that's roughly where they're going to be. Bomadine's a wonderful asset. That's a ways out there for them. And they're trading on that at a couple of billion. Silvercrest, beautiful asset, tough underground asset, narrow vein, great king of the grade, making lots of money, but not producing a huge amount of silver. And they're trading at a couple of billion with a 5-year mine life out in front of them. I mean, these are all facts. What's important, Ian, you can comment on this when you have yours, but when we're a 12-month build for the first part of our project, we'll be making as much silver out of the gate as basically they will be. And we're trading at a market cap over 100. There's your trade. If you can pick the guys that are going to get in production and execute, we're a 12-month build. So from my side, I just want to throw in a couple of the numbers here. And so people understand the project. If I have 1 minute to do that, Matt. So for those who haven't seen it, we've been in Mexico a long time. This is a big land package, 30,000 hectares. We've focused around the old Tiger mine for the last 7 years, which was an old American asset, 20 years, 100 million silver equivalent ounces at 2.5 kilos underground. Drill under it, around it, it's going to go really well. Spend $120 million and do all the work. You get to a pre-feas that looks like the following. We've got a 85 million, I'm round numbers here, 85 million silver equivalent ounces in an open pit, which is an incredible pit. We'll talk about that in a minute. And then about 100 million already in the underground, where we're in the first inning of drilling that off. Permitted as a right for the underground, but really we just aren't going to go after that and produce there. Mexico is always get that stop work first, always. And then when you have it, use that cash flow to drive underground. So PEA will come out on the underground first quarter of next year. All the drilling and work's done. That's a bench study right now. Stay tuned for that. We went full speed on the pit. MRE last fall, PEA that came out in November. The pre-feas, which we'll build on because we've got a starter pit with 3 years of measured and indicated in it. That pre-feas will come this year. And look what it looked like in the PEA. So everybody can get a financial snapshot here. This is a pit that's got a 59 million capex. This is a pit that basically the NAV on an NPV was 287 at 1822 was 287 million US at 56% IRR, 1.7 payback, makes $500 million free cash flow after tax US over the 10-year mine life. You got to go after that. I mean, it's a 2-to-1 strip. The grade is almost a gram. You're looking at gold equivalent. And at today's prices, Ian, this is what the best part is. We're going to all have to do our studies over again. That was at those prices. I'm looking at a sensitivity table. The NAV just on the pit, underground would be the longer part of this project, the 20 or 30 years. You're looking at a $450 million NAV just on that pit, 78% IRR, 1.3-year payback, makes $700 million USD over the 10 years. That is the asset we want to build, and we're going to join that little club on a 12-month build once we get this thing rolled out and getting ready to go in the fall. So if you want that trade, that's what Tiger's going to be. We always said you'd get to production.
Brilliant. Thank you, Clint. Ian, you've got 3 seconds.
Sorry, Ian. You know, edit half of me out and give me more time.
So sorry. So in 3 seconds, no. Go on, give us your pitch and take your time.
So I'll take a different approach, right? To not repeat a similar story, although we are more in the project development and exploration. But Outcrop has the Santa Ana project, which is one of the highest grade silver projects on the planet at indicated 614 equivalent ounces per ton, which is over 446 pure silver. So it's about 73% silver. So it's primary silver, high grade. So it's highly leveraged to the silver price. And so from my point of view, I start off with, I want a strategy that it doesn't matter what happens to silver price. And so therefore, it's seeing a project that has 37 million ounces in it and a very small coordinate portion of an overall district. And this year is all about focusing on demonstrating the market as quickly as possible, a pathway on how we're going to get over 100 million ounces, because we have an 18-kilometer runway. And that's actually what we're starting now. That second drill that I alluded to is going into the center of that overall corridor. And by the end of the year, we'll be getting down to the bottom to demonstrate how we're going to go from this little corner here at 37 over 100 million ounces. And then the second part is having that lever on being able to demonstrate if silver continues to be hot, it's following this pilot production, getting something permitted so that you can accelerate your pathway to production by expanding an existing project than having to build one from scratch or waiting till you get to a certain size before you start building it. It allows you to have some flexibility and the velocity that you can move forward. I think that's theme has come up a few times. The ability to go as quickly as possible and be able to have that advantage to take advantage of the market. So I think that we are extremely well positioned, independent of silver price, because of the high grade, high recoveries, and high quality payable potential. And we also have the ability that if things take off, we're highly leveraged with 73% of our value in silver, and to be able to accelerate to a pathway of production, because I think that's going to be a theme you're going to start hearing a lot over and over again. It's not just about ounces, but how quickly you can get them into production.
Gentlemen, thank you for your time and wrap it up there. Glenn Jessome, Silver Tiger, and Ian Harris of Outcrop Silver and Gold. Two good teams with good projects, and more importantly, they know what to do with them, and certainly into an environment like they've described today. So do go have a look at both of those projects, and hopefully you've learned something. Thank you.
Thanks a ton.